What's up everybody, it's Mike, and today I want to talk to you about the basics of position sizing. Now this is a topic that's come up multiple times on Twitter, and so I wanted to walk you through some of the basics of it and why it's important in the first place. Well, the reason why it is so important is because position sizing ultimately determines whether you are successful or whether you're going to fail it, even more so than where you get into a trade and where you exit the trade, right? Think about it like this. Think about it like, let's say you were the guy that bought Bitcoin the day that it was released, and you rode it all the way up to 20,000 or close to it where it was at its ultimate peak a few years back. Now, that would have been a stellar return, right? But what happens if you only bought just one coin? Well, that would have been a very nice return for that one coin, but would it have been life-changing money for that one coin? No, right? Now, also consider if you were the person that went all in on some other trade, right? Like, let's think of a trade that's really like just tanked hard. Well, think of Beyond Meat after it had topped, right? Like it had this epic IPO, broke out, ran, I think it was close to 500%. Take a look at that chart. And then let's say that you're the person that went all in while it was near the top, and then all of a sudden, your account blows up, right? Like, I've been on both sides of those coins and neither one is great to be on. And so it was the position sizing that led to the blow up, not that one trade, right? Like, there should be no one trade that determines our ultimate success or failure in the market. So it really comes down to our position sizing and having a system that allows us to play this game over and over and over again. And that is how we're going to be able to win. So how can we leverage position sizing to allow us to win in the market? Well, I put together this calculator for you guys. Check it out at marawealth.com/calculator. But this is basically how position sizing works. So, and position sizing can work for you whether you have a small account, whether you're starting out with $5,000 like I did when I first started out, or you are already trading 20,000, 50,000, 100,000, a million, whatever it is. Position sizing can work for you. But let's say that you're starting out small. You're starting out with the $5,000 account and you want to risk just 1% of your trading capital. And I know what you're thinking. You're thinking, Mike, I only have 5,000. I'm only going to risk $50 on this trade. How the hell am I going to make any money? Well, it comes with this next part, right? And part of the reason why you only want to risk 1% or that $50 is because you want to give yourself plenty of room to be wrong, right? Like, if you're only risking 1%, then that means that you could be wrong 100 times before you lose all of your money, right? And so you're not going to be wrong 100 times in a row. You're probably not going to be wrong 10 times in a row before you start to think that, maybe something's wrong with my system. There are systems that can be wrong that amount, and then you have that one gigantic winner that takes care of it all. But for the most part, you want to be in a system where you can risk this small amount, just 1%, and continue to play that game, and you come out ahead on the other side. In fact, for me, well, what I like to do is I'll risk 1% and only enter trades where I can potentially make 3 for every 1 that I risk. It's a little bit more advanced for the topic of this video, but just to give you some context. Anyway, back to the basics. So we're risking 1%. Well, what's going to make a big difference for us as far as how much progress, how much we can make with this, is going to come down to where we're going to enter and where we're going to exit. Now, let's say that on this trade, you found a trade that you want to enter at $100. And if you're wrong, go back to some of the previous videos that we did on price action and on chart patterns. Let's say that you wanted to exit below support at 90. Well, if you want to just risk that 50 bucks at 1% of capital, then that means that with this, you're only going to be able to buy 5 shares, right? 5 times 10 gives you 50, and you're only buying 5 shares. Okay, fine. But let's say instead of exiting at 90, let's say that you found a closer level of support, right? Well, what if you found support at 95? Now you're able to buy 10 shares and you're still only risking that same $50. This is the power of position sizing, and this is why, if you've been following along with any of my trades that I've posted on Instagram or Twitter, or more importantly on Stock Twits, or if you're in the Trader's Mind Chat room where I'm sharing all of my plans, you'll see that I like to enter pretty close to where I'm planning to exit, and this is the reason why right here, because you could buy more, you could leverage up, you could position size higher while still risking that same small amount, that 1%. Your money goes a lot further when your entry price and your stop loss are closer together. Now, it's to do this kind of calculation, this kind of math on every single trade would be a pain in the ass, to put it quite frankly. So that's why I created this calculator over here. If you go to merrillwealth.com /calc, you'll have a calculator that can do all this for you. And not only that, it will let you know if you are being way too aggressive in your sizing, or if you need to basically grow a pair and maybe look for another trade. So for example, like let's say you found a trade and you wanted to enter at 100, but you only wanted to have your stop loss way down at 50, right? Then that means that, well, you're only buying 1 share, right? You're not going to make enough progress on that trade for that to be meaningful. In order to just have 1-to-1, that trade's got to go up 50%. That it's very rare that happens. Even in this environment, well, when you have a trade like a Tesla or a GSX, would you really only want to buy just 1 share and it go up? I would much rather be in a trade that only needs to go up 15% and I'm making 3 times my money, right? Much better to go for the lower risk trades where your entry price and your stop loss are much closer together, and that's what's going to allow you to be able to leverage in and make so much more money on your trades. Now, I understand that's a lot to take in and a lot for one video. If you're using this calculator consistently, you'll start to get a much better feel for it. So go back, watch this video a couple of times, go use the calculator. The calculator is free for everybody, so go check it out. And by all means, come to one of our events, come check us out in the Trader's Mind Chat room. We go through all this stuff all the time, and I'd be glad to work with you and share more of my knowledge with you. I want to say thank you so much for watching this video. If you liked it, hit the little like button, drop a comment down below, let me know what you thought. If you have any questions about anything at all, if you want to let me know what you'd like to see in a future video, put that down in the comment section below and I will make that video for you. Thank you so much. I appreciate you. I appreciate your time, and I want to see you succeed. So let me know how you're taking action on all this stuff. Thanks again for watching. I'll see you again real soon. Take care. Much love. Peace out.